This is our Forex blog for February 13th, 2014, and these are our currency indexes, which let you see visually what each individual currency is doing. You can see the dollar starts off last night, comes up to yesterday's high, can't get above it, comes down, finds some support at the hourly and the point of control, can't really get a bounce off of that, which normally happens if the trend's going to continue. It's underneath the hourly. You can see the daily, weekly, monthly trends are all down. Breaks this major area of support and pretty much trends down all day. Meanwhile, the euro trends up last night, goes sideways, tries to make new higher. Containment bands most of the time contain price. Pulls back, finds support at the hourly, explodes up. So basically you want to buy the strong currencies like the euro versus the dollar, the yen strong most of the day. You can clearly see a double top plus a little mini double top over that hour. If a currency can't and it has many hours to break a high and it can't, it's likely to go the other way, so you can sell the yen versus another currency. We also have for almost a year worked on our Forex Signals, and I will show you those now. If you don't want to have to learn how to trade or don't use our currency indexes, you can just simply take these trades and also use our intelligent trailing stops. The stops measure statistically how strong or weak the currency is. I tend to give it some room to run at the beginning, and then once it gets going I have a tight stop. If the market becomes obscenely strong, then I have a wide stop that then tightens again later. You can see that here. It walks its way up. It looks like it's going to go up a lot more, so I widen the stop. Notice that right here. And then once it starts to go back up again, I tighten the stop, and of course there's a sell up here because we have a little double top and the statistical momentum is slowing. So you got in, you got out, you flipped, it went short, and you rode all the way down. And notice on the way down it also had a pretty wide stop, and then once the market was likely to reverse because the trend is up, once the downward pressure, using all of our statistical tools where we compare all the euro currencies to every other one, all the dollar currencies, every other one, we noticed that the trend, the counter trend weakness was lessening. So let's get out of this trade. It's likely to go back up. It wasn't enough for us to buy here, but it was enough to tighten the stop and get out and capture, a decent profit on that counter trend trade. Let's bring up the pound dollar, which was also very strong today. The dollar was weak, the pound was strong, and once this comes up, our tools now show you what's going on. It lets you know approximately how much of the mathematical calculations on past bar is being done, and then when it gets to 100% it loads. And again, we have yesterday small loss, pretty much break even, 4 pip loss, 8 pip loss, maybe 5-6 pip win, 30 or 40 pip win, 20 pip win, loss, 30 pip win today, pretty much 3 pip loss, small win, loss, win, yeah, a small loss right here, and then we have a probably 15 pip win here. But our signals, when combined with the currency index, really do outstanding things. You can see the dollar's been trending down all day. You want to sell this on a little bit of a pullback, especially when it comes up to the previous day's low. Major resistance when coming up to it from below at the hourly moving average right here. And our perfect oscillator, anytime that's near the 80 level or at the upper containment or upper Bollinger Band of this indicator, it's likely to reverse. So basically you want to find a currency that's strong, that's maybe likely to go up. The yen was strong earlier and it pulled back. But the nice thing about seeing each currency as a chart is you can draw fibs on there, trend lines, and so forth. It's right at yesterday's most actively traded price. It's right at our Fibonacci profit target zone. It's very likely to get a bounce here, and the dollar is likely to go down. So the dollar yen, around 1130, 1140, very likely to go down. Now, you're never going to have 100% winning trades, but if you take trades using our tools, keep in mind again, 1130 is likely to go down. What does it do? It goes down, up, down. You didn't make a fortune on this trade, but our tools correctly predicted the direction. You never know the magnitude of how much you're going to make. Sometimes you're going to make, only 1 or 2 or 3 pips. Sometimes 5 to 10 pips. Frequently 15 to 30. And every once in a while, you're going to get those home runs where you get 50 to 150 pip wins. Let's take a look at some of the other currencies. Obviously, the Australian went down. It was underneath a lower containment band. Usually when that happens, markets go sideways or you get a bounce up. The Swiss was strong today. And, you can use fib levels, trend lines, and so forth to predict proper timing. So this, let me redraw that on here. This made a nice 61 pip index move up, pulled back right to the 38% retracement, right to last week's most actively traded price, major support area, and the hourly moving average. So when this starts to go back up again, it's very likely here 430 to be a buy, and you want to buy it against whatever currency is weakest. Let's take a look at some of the other ones at that particular time. You can see the dollar was trending down. It wasn't below the lower containment band at that time. The pound was up a lot, and it was underneath its hourly. The yen it had traveled up quite a bit and then just broke its hourly right here. So you could trade that one versus the yen. Let's take a look at the Swiss yen at 4.15. And you can see just an astronomical big move. 10, 20, 30, 40, 50 pips up. And if you go to a 5-hour range chart, you can, more closely, analyze this trade. And you don't always get into it at the beginning, but maybe you got into it at 113.80 versus, 65. So you're in this 80, 90, and you ride it up. You move your stop up underneath this little swing low. With a range chart or a tick chart, you can get a feel for where the next fib target is. A lot of times, minute-based charts, you can't. It comes up to the 27 fib area. It's not a very popular fib area, but when markets don't reach their other fib areas, they typically, at the minimum, will reach this if they have any kind of strength. And so you probably want to get out of your trade here. You can use regular trailing stops on these as well. And I usually use 1.5 chandelier stop on these. It's a pretty decent place to, you can always get out of half your trade when these get hit. Put your stop underneath a little consolidation low, and then when it goes up, put your stop underneath here. When it goes up again, just kind of eyeball a trend line underneath the lows here and get out. Now, typically again, when the markets are this strong, you get a pullback, decent place to buy, put your stop underneath here. The fact that it didn't explode through the high and keep going, double topped right here, you want to get out. If you're a really aggressive trader, you can flip and do a counter trend trade, ride it back down 20, 25 pips. There's so many different ways of trading using our tools, but the signals make it easy for people that don't want to have to learn anything. Maybe you only trade an hour a day. You don't want to have to learn the 100, 150 things that we've taught in our Forex classes of the past. I spend all my time trading, creating automated trading systems, and those exact same entry and exit rules that I use for auto trading show up in our Forex signals. I've spent probably 10,000 hours, creating those and designing them over the years. And they look at multiple time frames. There's probably over 50 different indicators and settings of indicators. I don't use 50 indicators, but I very likely have over 50 different settings for various indicators, measuring the slope, the intensity, the percentage of currencies going up or down, and also some tools that I haven't really released in the software. I use in the signals to predict direction. For instance, here's a pretty complicated indicator I use to trade with, and I've never put it in a software just because most people are going to have major problems with it. I forgot to, it's after the day flip, unfortunately. Right now it only shows the current day. But what this does is it kind of shows what percentage of currencies are above or below their value areas. These are some of the most sophisticated trading methods that we have, and it's all volume and trade time based, and it pretty much lets you see the pound was so strong today it was above the upper value area, it was above its point of control, most actively traded price during the previous week. And this tool, pretty much the entire day, the market was above the point of control and even the upper value area, which means it's very likely to go up. And so we're focusing on buys, and we have very few sells. This is a pretty high probability counter trend trade. It didn't lead to much, so we did sell it. But earlier today, before I added this to our signals, there were 3 other losers today. So I got rid of 3 different losers, and this particular win, instead of getting out right here at 56, it got out up here at 64 for another 8 pips on that win. Net change close to 34 pips more profit based on using this tool. And again, it's a very complicated tool that most people aren't going to really grasp, but our signals use it. It's just one of close to 50 plus different tools and indicators that I use.